What's up, everyone? Dylan here. I wanted to hop on and do another episode of the weekly introduction video. As always, I'm going to share my thoughts on the overall market. I'm also going to talk about fundamental and technical analysis that backs up my overall thesis. So let's head right into it. We could see on this naked weekly chart, the market has been all red. So if we count, we see 1, 2, 3, 4, 5, 6, 7 red weekly candles in a row. In fact, ES actually set a record last week, closing down 7 weeks in a row. This has only happened 3 other times in history, in 2001, 1980, and 1970. So last week printed the 7th red week in a row, which was the 4th time ever. So that's a very big deal. So we talked about this weekly candle on last episode, and I actually told you guys that this was a bullish candle, right? If you remember, I compared this candle to this candle. So this particular candle from the week of May 9th displayed a weekly hammer candle backed up by gradual increasing volume. So this particular candle, despite it being red, was actually bullish. Okay, we could see, like I said, when ES pulled back, buyers were willing to buy the dip and push value higher before closing. So I actually expected the market to at least sustain value, last week, but as you could see, that did not age well, and in fact, ES actually broke those weekly lows. So, it's clear as day that every single rally from year to date has been met with selling and pushed to lower lows. In fact, last week, the ES actually entered into quote unquote bear market territory. So, by definition, bear market territory is when an asset comes off of its all time highs by 20% or more. So, like I said, this is the case for any asset, whether you're looking at a stock, cryptocurrency, future index, whatever the case may be. So, based on my own calculations, I did 20% of the all-time highs on ES, and the number that I calculated was 3846. I've seen a few different numbers circulating on Twitter and the news, considering some people use SPX, some people use SPY, ES, so on and so forth. So, like I said, for me, 3846 is the magic number. So, as you could see, last week on May 20th, ES breached below that bear market territory line in the sand. Okay, this was a very, very nice looking candle for the bulls, as I mentioned in the Discord. So it's a very nice doji candle. Usually doji candles represent indecisiveness, but I like the fact that the open and the close of this particular candle were at the upper end of it. So, when you see the open and the close, right, the body of the candle towards the upper end of the candle, such as this, usually that is a bullish sign, and it gets followed by, bulls stepping in and pushing prices higher. So this is a very, very nice candle. As I said, you could see that the price, bulls were able to step in despite, bears pushing prices into that bear market territory. So obviously you could, predict that once a particular asset goes into bear market territory, it enhances fear. So I wrote down a few of the headlines that I've seen ever since that bear market territory was touched. So these are headlines from reputable sources such as Barron's, Wall Street Journal, New York Times, and Bloomberg. I'm just going to go ahead and read them off. This was the first one. The stock market has avoided a bear, but the sell-off isn't over. That was from Barron's. Another one from Barron's. The market may not hit a bottom until the S&P 500 sinks to 3,000. This one is Wall Street Journal. Conditions are ripe for a deep bear market. Another one from Wall Street Journal. Stocks are trading like a recession is coming as market pain spreads beyond tech. Another one from Wall Street Journal. The market is melting down and people are feeling it. My stomach is churning all day. So as you could see, these are very, very negative headlines. And, when reputable brands, or I should say newsletters, put out these type of headlines, it definitely enhances fear. It triggers, people to be concerned. They're scared or worried that their 401ks are going to deplete, so on and so forth. So, the list goes on and on. I'll say one more. This was from Bloomberg. It says, this was the headline: retail stocks lost roughly $550 billion in market cap, but more horrors await the industry as the April end earnings season continues. So like I said, it's all negativity, and there's just a lot of different things weighing in on the market. So not only do we see those headlines circulating, we also have some of the things that I talked about over the last few weeks, and more have hit the tape since. So as you guys know, as I've talked about several different times, I sound like a broken record, but this year we have had the Fed raising rates, we've had monetary policy, Russia and Ukraine tensions, Shanghai's zero tolerance policy against COVID, and then this week some new ones are the fact that Walmart and Target suffered massive losses due to their earnings. The newest one being monkeypox. So it's been a domino effect with negative news sentiment. Okay. And despite this, this domino effect of negative sentiment, in my opinion, it's getting absorbed fairly well. So, like I said, there's nonstop negative news, hitting headlines every week, right? It's just one thing after the next. And, obviously the market has been making lower lows and lower lows and lower lows, and every rally cannot sustain, value. But considering that there's so many different pressures weighing in on the market, in my opinion, the market has been able to absorb, right? We could see this based on these nice, lower wicks on the daily chart, right? You could see, let's see, we kind of have support in this general area, right? So every time the daily candles go below that blue line, you could see that buyers are willing to buy the dip, step in and push value higher. And like I said, considering we have tons of different negative catalysts going against the market, it's pretty impressive that buyers are still kind of holding this value higher. So that's just something that I've noted. As I said, on last week's video, the Walmart earnings were going to be, the most important catalyst for last week, as it would provide crucial color into several macro topics, including the health of the consumer, inflation, spending, hiring plans, so on and so forth. So, Walmart reported earnings and really got hit on May 17th, but the market totally absorbed the weakness, as you could see in this particular candle. Plus, Powell got on and spoke in this, on this particular day. However, Target came into play the following day, and it was just a double whammy. So not only was Walmart, terrible, Target was, just as bad, if not worse. And this candle was, the aftermath of both Walmart and Target, earnings. So, I don't know if you guys have seen both charts. Here's Walmart, fell off a cliff, right? It's down, 21% in the last month alone. And then Target, same deal, fell off a cliff. So these two brands are, they're very, very well-known brands that, really give you a good picture on overall, consumer health. And the fact that both companies lost, roughly 30% a piece in just 1 month, obviously that's, something to really, consider going forward. So, like I said, although the Walmart earnings were observed very well, once Target came into play, the market just got absolutely decimated that day. So let's move on to this chart. So I showed you guys this chart a few different times in the Discord. It kind of just represents the overall trend year to date, or not necessarily year to date, but since April to now. So for the last, call it 2 months. Very, very simple chart, right? We have two different parallel channels, one on top, one on the bottom. One acts as, support and the other resistance. And then we could see that the market is coming into some type of bottoming pattern. As you could see, like I said, this is an 8-hour chart, kind of random, but on the higher time frame charts, you could see some type of support, being displayed based on the lower wicks. So, it's important to note that every time ES comes up to this upper parallel channel, sellers step in and violently push price lower. So, as you could see, price came up here, and then sellers stepped in, came up here again, sellers stepped in, and then yet again, it tested this upper resistance channel, and then, like I said, sellers yet again stepped in. So something very important to note is the fact that these last two sell-offs came exactly 1 day after Powell spoke. And yet again, here we are. Tomorrow is FOMC minutes, and guess who's speaking? So will it happen again where we rally for Powell's speech? Maybe there's a nice breakout above this, this whatever you want to call it, this pattern, and maybe it is followed by yet another bull trap, and the sellers push value lower to new lows. Could that happen? Of course, hopefully, Powell speaks tomorrow for the FOMC minutes. Prices, catch a bid and rally and then sustain value. That is the most important thing. I understand that I feel, that I sound like a broken record, but it's so important that bulls are able to sustain value, because as you can see, every time the market rallies, sellers step in, right? Rally, sold. Rally, sold. Rally, sold. It's just a very common theme, and the bulls have not been able to catch a break. Okay, so 7 consecutive red weeks in a row. Will it be 8? Who knows? But, this is the time to shine for the bulls. So, as I said, tomorrow is FOMC minutes, and then this Friday is the USPCE. Both events should display how inflation, is developing. So hopefully the Fed shows that, there is a plateauing effect on the inflation, forefront. So I've been saying that for weeks. Obviously, we have not been seeing that, and we've been seeing lower lows, but I'm still staying optimistic considering the Fed has not changed their dialogue. That is the biggest thesis, okay? Despite the market making lower lows, Powell and the other main Fed speakers haven't really changed their script over the last few months. So that is the biggest thing. Also, the VIX, right? Something to note about the VIX. On May 18th, right? This was the day after Powell spoke, right? He spoke on the 17th, and then the 18th, we had that massive down day. This down day was the largest percentage move to the downside since June of 2020, okay? Like I said, this drop was the largest percent move since June of 2020. You would think that would trigger fear and panic and the VIX would explode. However, that did not happen, right? So May 18th was here. You could see VIX was nowhere near the prior highs. So, as I continue to show you guys in the Discord and on these weekly introduction videos, the VIX is clearly showing relative weakness compared to what should be happening. So when ES makes lower lows, especially on higher time frames such as the daily chart, VIX should technically be making higher highs, especially if the market has its largest percent drop since June of 2020. Yet, like I said, on May 18th, when that happened, VIX barely, touched the prior week's highs. So this is, it's an ongoing thing that I've been, constantly reminding you guys about, but it's very, very, very important to watch these types of context clues. So I was very surprised that VIX wasn't able to really get going based on that particular ES drop. So, the fact that the Fed hasn't changed their script and the VIX is still relatively weak, my thesis remains the same, okay? So a weak VIX indicates that the sell-off is getting exhausted. I keep saying that because I keep getting members asking me. So hopefully that helps. So moving on, another detail that could provide a bid in the market is the dollar index. So there's a lot of different ways to read the dollar index. I'm going to put 2 different links in the description of this video. These 2 different links really are well written, and they should help you guys understand the fundamental reasons behind how a weaker dollar is actually beneficial to the the stock market. So, like I said, I'm not gonna explain it here. All right, so let's see. I had these drawn. Oh, okay, let's see. So I gotta go here. All right, so we can see that the dollar index has just been on a rampage ever since last year. So it's been on a straight uptrend. Okay, like I said, I'm not going to go over the fundamentals right here. I'll link them in the description below. So in regards to technicals, we could see that the dollar index broke out of this weekly downtrend resistance line, and it's been going parabolic since basically a year ago. It's just been on a straight uptrend. So it has been coming off the last 2 weeks, which is beneficial to the equity market if it continues to come off. So I highlighted this 100.27 level. It has acted as clear resistance in the past. I am speculating that it will, if it does continue to come off, it might find support at that level, considering it was prior resistance. If it continues to go lower, I do believe that it will act as a nice, support for the equity market. So I'm definitely going to keep an eye on this. It's also important to note how the dollar index compares to other foreign exchanges, across the world. So, like I said, I'm not going to get into it in this video, but I do look at how the dollar index, correlates to different foreign exchanges. But, I'll save that for another video. So, let's see. Okay, here's another technical analysis picture. So I have this one. We were just going over this, right? So that's one of the chart layouts that I'm looking at. And then another one is here. So as you can see, based on this trend line, we have touched it 4 different times, and it has acted as very, very strong support, right? All the way dating back from January 24th of this year. So every time the market makes new lows, it has hit this downward trend support line and bounced, right? Here again, and then most recently last week on the 20th. So going forward, I will definitely be keeping an eye out on this level. It's similar to this downtrend channel, but it's slightly different. So I've just been keeping an eye on both. So as you can see, the market has been doing a pretty good job holding not only this downtrend support level, but also this 3858.5 level, which acted as a nice area of support and resistance in the past, right? See resistance, then it became support, resistance, and then support. So history tends to repeat itself, and it has been doing a very nice job acting as nice support. So let's get into some other positive sentiment, because we've been seeing way too much negative sentiment based on headlines and CNBC and just social media and all that kind of stuff. So JP Morgan had their quarterly conference call, and their CEO Jamie Dimon says, quote unquote, storm clouds over the United States economy may dissipate. So that was pretty important to note, considering the last conference call that they had as a company he had way more negative sentiment. So on the last one, Jamie Dimon had some concerns, and then this one, which was last week, he said, like I said, storm clouds over the U.S. economy may dissipate. So that was pretty, important to note, in my opinion, considering, J.P. Morgan is, that's it's a big credible source. Also, Shanghai's COVID cases fell to a 2-month low on Sunday, and there were no community infections for a second consecutive day, leaving the city on a path to reopen over the coming weeks. So I talked about, Shanghai's zero tolerance for COVID on the last 2 introduction videos. I gave my thoughts on how that is very important. I recommend, watching those. But essentially, that's just going off of the last 2 videos, and, it's moving in the right direction. So that's also a very, very bullish sign for the market. The last thing I wanted to note, this was I thought this was a very, very bullish thing to read. This was posted by BBC, I believe. I could check on that. I'm just going to read a few paragraphs. Essentially, it goes over insider buying. So corporate insiders whose purchases correctly signaled the bear market bottom in 2020 are bottom fishing during the S&P 500's longest stretch of weekly losses in 2 decades. More than 1,100 corporate executives and officers have snapped up shares of their own firms in May, poised to exceed the number of sellers for the first month since March 20th, or 2020, my fault. Let's see. An implication of the buying binge may be that officers and directors are confident they can deliver profits even as the Fed taps the brakes on the economy. Notably, the insider buy-to-sell ratio also jumped in August of 2015 and late 2018, with the former preceding a market bottom and the latter coinciding with one. The ratio has surged to 1.04 this month from 0.43 in April, so it has doubled. That's a good sign. It is a function of investors functioning at the 30,000 foot level or macro, whereas insiders are functioning at the boots on the ground. That's what Craig Callahan, who is the chief executive officer at Icon Advisors, said. Not only buying from company insiders is picking up relative to selling, firms are also spending more money to buy back their own stock. American companies have announced plans to purchase a little over $650 billion of their own shares since January. That is 19% above the intended total at this time last year. It's encouraging in the sense that they have enough confidence in their businesses to put more money in. That was said by John Carey, Managing Director and Portfolio Manager at Amundi Asset Management. We'll see if the trend persists, if the insider buying continues, but generally it is a positive sign. So like I said, just some positive, optimistic stuff, to hopefully, make you guys understand some of the theses that I'm using to predict what happens next in the market. So obviously we have technicals that we went over, right? Both these patterns. We're also seeing some type of buying happening at these lows. And, some of the other fundamental stuff that I've talked about with the dollar, the VIX lagging, JP Morgan conference call, Shanghai. There are a few different positive news catalysts that are supporting this, recent, I guess you could say, plateau-ish, an upside-down plateau. So, tomorrow is very important in regards to FOMC minutes, and then Friday, US PCE. Obviously, no one knows what's going to happen, but I do believe that if ES continues to hold value above that 38.58-ish level, the market could see a nice relief bounce. Let's not get too far ahead of ourselves, but that's just where I'm at as of right now. Hopefully this video helped. If you liked it, great. If not, I apologize. Any feedback is greatly appreciated. Peace.